One of the greatest investment secrets of all time is compounding. If you want to be truly wealthy, you must learn how to maximize compounding over the course of your investing life. To find out how, stick around. Hi, I'm Lachlan Campbell, the founder of Mad Success. My purpose, my why, is to help people transform their health, wealth, and happiness to live empowered, unstoppable lives. I do this by providing life and financial success videos, coaching, and courses. Most of what I provide is free to help people from all walks of life, but I do offer more advanced programs for those that are interested, and I'm proud to have launched my Mad Success life and financial success coaching programs to help men and women transform their lives. If you or someone you know are struggling with your job or career, your marriage, your health, or your money, I can help transform your life. Right, this is my third dividend-related video in a row. If you're not sure what dividends are yet, check out the video here. And if you'd like to learn about dividend ETFs, I have a video for that as well. This video is all about dividend compounding and how it can make you truly wealthy over time. Compounding is the process of investing your money into income-producing assets and then reinvesting the income generated from those assets back into more income-producing assets. And I'll go into much more detail later in the video. But first, know this. Dividend yields are at decade highs. There are many stocks and ETFs with higher annual yields right now, over 6%, some as high as 10 or even 12%. We haven't seen yields like this since the global financial crisis. These are excellent long-term returns if you lock them in and do not trade out of the assets producing these yields during periods of market volatility. But these fantastic yields will not last for long because stock prices will recover from the current lows. We just don't know how soon, especially with the US having a potential recession in 2023. When stock prices rise, dividend yields fall. So now is the time to lock in these high dividend yields. We don't know when the stock markets will recover from this year's sell-off. But a few weeks ago, on December 1st, two major stock market positive changes occurred in the two most powerful nations in the world. If you follow me on Instagram at mad.success, you would have heard me discuss these changes on December 1st. Jerome Powell, the chairman of the US Federal Reserve Bank, or the Fed, that's the central bank of the United States, announced that the Fed was going to start slowing its interest rate hike program to give time for inflation to slow down. Rising interest rates and inflation are not good for business and are not good for consumer demand. That's you and me spending our money. When consumer demand slows, that means when we stop spending so much money, this impacts business and the economy itself starts to slow. And this in theory will drive inflation lower, which is what the central banks want. Higher inflation is not good for the economy because both businesses and consumers suffer. Some of you are thinking, but businesses are the ones raising the prices and we're the ones suffering. Yeah, I get that. To a degree, it's true, but the businesses also have costs. Don't forget that. Businesses have costs too. This is labor costs and production input costs that impact their manufacturing and supplies. So their costs are also rising. It becomes a vicious cycle, which is not good for any economy. In China, on the same day, it was announced they were going to lift many of the COVID-related restrictions that have been in place for nearly 3 years. Stock markets rallied sharply in Asia and then across the world. Why? Because China produces many of the goods that you buy at the store. Clothing, shoes, bags, kitchen supplies, cleaning products, etc. Everyday items that you buy, much if not most of it, is made in China. China's strict zero COVID policy has kept many parts of the country closed. This meant that many businesses have remained closed for most of the last 3 years. And that meant that there has been a shortage of supply of the clothing and shoes and other items that you normally buy. A shortage of supply pushes prices higher, especially when the demand rate is the same or demand is higher, such as what has occurred with consumer revenge spending over the past year or so. So China lifting their zero COVID policy over the next 3 to 6 months is very stock market positive because it will mean inflation should fall as China's manufacturing gets back to work. So we have a dual impact on inflation to force it lower. Rising interest rates might be slowing by the central banks in the Western world, and China's manufacturing is coming back online. Demand is slowing because of rising interest rates and inflation, and supply is rising because of more production potentially out of China. This should lead to inflation falling sharply over the next 12 to 18 months, which is hugely positive for stocks. But that means dividend yields will fall. I've suggested over the past year to stay invested, to be long-term investors. But many investors panicked and sold their stocks for a loss, and many are too afraid to reinvest because of potential further downside. Yes, I believe the US will go into recession in 2023, even if it's just a mild recession, which we don't know yet. The UK and Europe are already in recession. China has been slowing. The world is not in a great place. But what's important to note is the stock market's bottom usually happens 6 to 9 months before the end of a recession. The UK and Europe have already been in a recession for nearly a year, and the rest of the world has experienced much slower growth because of COVID. Now, I'm not saying we're at the bottom of the market yet, but with these two major shifts, and in particular if China opens up sooner than later, inflation is going to fall, and that will send stock higher. So be invested. What does this have to do with dividend compounding? Everything. It has to do with everything because this impacts your well-being, your financial health and financial stress. It impacts how you live, how you invest, but it's also a major opportunity. Dividends are high yielding right now because stock prices are low. And this good news out of the US and China is stock market supportive, and stock prices will eventually go higher, and dividend yields will therefore be lower. The sooner you start to actively buy dividend stocks and dividend ETFs, the sooner you can lock in these higher yields for more income over the long term. More dividend income by locking in the current higher yields means more dividends for reinvestment back into the stocks or ETFs that you have invested in. The more dividends you receive and reinvest, the faster you can grow your wealth. Compounding is the process of investing your savings into income-producing assets and then reinvesting the income generated from these assets back into more income-producing assets. There are three major income-producing asset types: stocks producing dividends, bonds producing interest income, and real estate producing rental income. We're talking now about dividends, dividend income, and reinvestment. But the same principles apply for bonds and real estate. When you receive the investment income from the asset, in this case dividends from stocks, you reinvest it back into the stock or ETF so that your dividends start to earn dividends by being reinvested back into the dividend producing stock or ETF. Over time, your dividends produce more dividends, which were reinvested and produce more dividends and so on. This is compounding, and this generates real long-term wealth. Dividend investing is for all ages because you're creating income from your assets. Dividend investing is without question the best way that I know of to grow your wealth. Compounding only works if you're a long-term investor. If you think you can beat the market and trade stocks, by all means, go for it. But did you know that of all the professional investment managers in the world, and I used to be one of them, less than 5% of all professional investment managers outperform their stock index over the long term. It's almost impossible to outperform the market consistently over time. And get-rich-quick schemes will only make you get poorer faster, which many of you have experienced with this stock market and crypto market correction. Here's an example of compounding. Let me ask you a question. If someone offered you $1,000 today, or a payout over the next 30 days that started with just 1 penny today, but it doubled every 30 days, which would you choose? You can have $1,000 today or 1 cent today, but the 1 cent will double for 30 days. What's your choice? If you chose the penny today, by day 15, the penny would have turned into a whopping $163.84. Not yet $1,000. But by day 30, what started as a penny and doubled every day would be worth about $5.3 million. That's the effect of compounding. Now, that's an extreme example, but it is the impact. Compounding accelerates your wealth over time. To help you visualize the effects of compounding in the stock market and how to turbocharge your wealth long term, take a look at the chart for McDonald's Corporation, MCD. If you invested a one-time amount of $5,000 in McDonald's Corporation back in 1990 with no further additional money invested, but you also reinvested the cash dividends back into the shares of McDonald's over this period, your shares in 2022 would be worth close to $275 US. If you kept the dividends as cash and did not reinvest them, your shares would be worth about $150,000. By reinvesting the dividends, you would have nearly doubled the amount of net worth over the same period. That's the effect of compounding. This is how true wealth is created, but it requires discipline and patience for the long term and remaining invested. Almost all online brokerage accounts allow you to reinvest your cash dividends into the same stock or ETF. So with your online brokerage account, look for the Dividend Reinvestment Program, or DRIP. There are some stocks that encourage you to reinvest your cash dividends back into their stocks. And to do so, they'll give you a discount on the stock price. As an example, the Royal Bank of Canada, RBC, which is the largest bank in Canada, just a couple of weeks ago announced that they are going to start putting this DRIP program into place for their shares. Here's the news article announcing this program. It provides investors with a discount on the stock price to encourage reinvestment of dividends, which is very stock supportive. Dividend compounding is about long-term wealth creation. You can stop the reinvestment anytime should you need the income from your dividends for your everyday expenses. Remember, when your aggregate monthly income after taxes from your investment income is greater than your monthly expenses, you are financially free. How you choose to invest is a very personal decision, as is the amount of investment risk that you're comfortable with. But the path to real wealth during your lifetime is to put your money to work for you, and compound investing over the long term will make you wealthy if you stick with it. Today, it's easy to find single stocks and dividend ETFs yielding 4, 5, 6% or higher, even 8 to 12%. But you need to be invested to capture these yields, and you need to stay invested for the long term for compounding to take its effect, to provide you with significant wealth growth. In my personal portfolio, I currently hold both a dividend ETF and a dividend-paying stock with a dividend yield of over 12%. 12%! It's phenomenal. This is not a recommendation for you to buy these assets, just an example of what is currently available in the market as of early December 2022. If you're interested to know which ETF and stock are currently paying over 12% as of now, please email me directly at ask@madsuccess.com. If you receive value from my videos and would like more, please do me the kindness of liking my video and subscribing to the Mad Success channel. I'm here to help you win in your personal and financial life so you can live the life that you know you deserve to be living. Thanks for watching. I'm Lachlan Campbell. Cheers.